Good morning. It's August 15th. We've indicted President Trump for the fourth time, seems a little absurd. But Mark, Professor Mark Putrino, I'm sure will enlighten you a little bit on it today. Mark, good morning.
I think it's amazing, man. They've actually made Trump a sympathetic figure. You know,
Yeah.
uh,
How can you take that derangement syndrome and flip it so fast? That's amazing.
and I was saw Alan Dershowitz talk about this guy. What's his face? He Jack Smith, I guess his name is.
Yeah. Yeah.
He in his like indictment or whatever, he left out the words when he quotes Trump's speech. He left out the words peacefully and patriotically. So that is a lying by omission. So he broke the law, and this is Alan Dershowitz's opinion. This is not mine. And Alan Dershowitz is no fan of Donald Trump. So
No, he's not. He is.
when you got a guy like that, like talking like it's like wow. I mean, and then you got Hillary Clinton on there gloating, and some of these commentators like I remember I never watched them. I can't watch them, but years ago there was like Rachel
Yeah, go
Maddow
ahead,
had
Mark.
this big like this big story like blah 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 where she was going to oh, it's Jeannie. Hello, Jeannie.
It's
How are you?
Gene.
Hey Sean. Hey, Mr. Steven. Yeah, she
Good
had this
morning,
big
guys.
story like, oh, Donald Trump only paid $75 in taxes. They all were going nuts, and it's like that's the fee that you pay when you delay your taxes. Okay, so it's like they just don't get it, and you know what though, they got the last laugh because they get paid millions of dollars for basically lying. I mean,
Listen, the amount of lying going on, man, and the amount of just trying to spin a narrative and make a show for people to see, that whole January 6th narrative and whole show and production. I mean, the whole thing is made for television. It's a soap opera that we're watching happen in front of us. I mean, it could be all my children or days of our lives for all that matters at this point.
well, it's all going to turn on them because they just push it too far. They just overplay their hand. I mean, come on, Rico. I mean, that's what they used to put away the mafia. You
Dude,
know, I mean, um, anyway, I was just reading this article here by Kramer. Jim Kramer says new Trump indictment, not weak China data is reason for depressed sentiment. I mean, I don't know about that. I don't know if people are like, oh, Donald Trump got indicted. Let's go sell our stocks.
what do they
Um,
just send this guy out to say the most outrageous shit?
yeah. Um, I don't know, man. I just think it's kind of ridiculous.
I
But
mean,
this is
I'm
what we
sure
get. We
he's
live in a
been.
world where people aren't interested in reading books or learning about history or whatever. So, but I don't know if I would agree with this. Actually, I would probably disagree with this story.
Yeah.
But I just don't see it. I don't see people being like, "Oh, Trump got indicted. Let's go sell our stocks." I mean, we've been talking about this for a while, how the market looks weak, and I think you got to kind of just get away from, just get away from the news and really just kind of focus on the market action, and that's because the market action is never wrong. So, like we talked about yesterday, right, or we've been talking about for the last couple weeks, if the market gets down to this level here, it's going to probably bounce a little bit because there's support around here and it was resistance. So we're talking to within 15 cents of a $440 security. So resistance can become support. And this has to do with our seller's remorse, right? People sell here and then the market goes lower. And the market goes higher. And a lot of the people who sold are like, damn, I made a mistake. I shouldn't have sold. I'm going to buy my shares back. And then what happens is, support is this large group of buyers who are looking to pay around the same price. All right. In this case, 443.50. So they see the market going lower, and markets go lower because there's not enough demand or buyers out there to absorb all the shares. So the sellers are forced to offer their shares at a discount, and this forces a downtrend. Well, when some of the people who want to buy notice, oh, look at that, market's not going down anymore. That must mean there's new buyers coming in. They start to get nervous and they jump ahead of each other, and you get these bounces off of support because of anxious buyers trying to, outbid each other. So it's not because like, oh, well, this news story or that news story. I mean, maybe it's different in the retail world. I don't really know because I've never really been in the retail world. But in the institutional world, people are not sitting around a conference table right now or sitting around a table in a conference room saying, oh, gee, Donald Trump got indicted. Let's go sell our stocks. It just doesn't work like that. Most of the time, the vast majority of the time, most investment strategies take a long time to develop and people set them up and they stick to them. Now you get this shorter term trading is what we call momentum trading. And a lot of this is done by what we call proprietary traders, which are traders who are on the buy side, who are basically just trading their firm's money. So they are the ones who react to support and resistance. But, in general, it's like, the media just has a need to try to put every kind of little story together or every little move in the market together. And I think they do. Every little move has to be attributed to some story. And I think that they really do the public a disservice because it's really just entertainment. And they act like maybe they think what they're doing is right, but it's just not. I think it gives the public this, or it makes newer traders confused. Because it's like, oh, the market's up. On this. Oh, the market's down. Oh, because of the Trump impeachment, or whatever. It's like, I don't know. They just do I think they do the people a disservice. So my advice to newer people is just like, don't even bother watching the media because they're just going to confuse you. All right, so let's see here. So once again here, right? Here's another example of a market moving based on price levels. It's the same thing. So yesterday, you can talk about whatever, right? Yesterday's move was this because of that. Maybe it is, maybe it isn't. But to me, the reason why we moved up is because you have these buyers who are anxious, just trying to cut ahead of each other. So resistance here became support here. And now we get back down to support. There tends to be support at former support levels. And this is another form of seller's remorse. See, seller's remorse can turn resistance into support, but seller's remorse can also keep support intact for a while. There are people who sold here who regret doing so once the price goes higher, and they tell themselves, I made a mistake. If this gets back to my level, I'm going to buy it. And that's what happens. So seller's remorse can turn resistance into support, and seller's remorse can keep support intact for an extended period of time. Maybe I look at the world differently because I'm a trader, but I just don't think that there's this cabal of people that are out there watching what they're saying on CNBC or whatever. I mean, I don't even watch CNBC anymore, but sometimes I watch Fox Business News, and I really like Stuart Varney, but I think he's probably the worst when it comes to that. Is, just every little move. Oh, something happened, and a butterfly waved its wings in the Caribbean, and the market liked it, and it's up 30 basis points. If a market's not moving if it's not more than like 50 basis points, it's just random order flow. It's just like, think about it this way. Say you're at a firm, I don't know, like Charles Schwab, and you got one client calls up and says, hey, I want to withdraw $100,000. And at the same time, you got a client who's like, oh, I want to put in $200,000. Well, now the traders have to buy $200,000 worth of the same stocks, or $200,000 of stocks when they're selling $100,000, because you can't just take shares and move them from one account to another. They got to go trade it in the market. So you're going to have a buy order that's twice the size of the sell order that you have, and it's all going to be the same stocks. That's going to cause the market to move, and it has nothing to do with the price of tea in China or whatever.
So how do you execute that, Mark? Do you just have to push it through different buyers and different sellers?
Well, if you had a client that, let's assume it's a mutual fund, right? So, and let's assume in the mutual fund there's 50 different positions. What you would have to do is you run a program, right? Or you do figure it out on Excel, but you're going to have to buy every one of those stocks because you need to prorate everything across the account. So right. That's a program, and you would probably send that out to one broker. And then on the other side of it, you got to sell all those 50 stocks. So you would probably just send that out to another broker. And what I would do is I would say, just try to get the VWAP, just try to get it in line. You don't want to overthink something like that. But stuff like that happens all the time. I mean, there's continuous flows, continuous money coming in of places, money coming out of places. And it's just, it's not based on the news. It's just based on, I mean, I guess you could argue, well, maybe the guy read the news and that's why he wanted to donate his money, or invest his money. But think about it, right? People sell stocks because they need to raise money, for whether it's for tuition or whatever, and it's like, hey, if you gotta raise some money to pay for your kid to go to college and you're going to sell a bunch of your stocks, you're not going to really be paying attention to the news, right? I mean, you got to sell it regardless. So this is what happens. We have these random order flows. The vast majority of market movements are just kind of random order flow. I just kind of want to convey the message that in the institutional world, people are not sitting around watching the news and basing their trading decisions off of it. This is not how it works. You get clients that donate, or I can't say donate. You get clients that want to invest more money, so they'll wire you money. You got to go out and buy the stocks, or like on a real institutional trading desk, there's always tons of stuff going on. You get continuous flows in, flows out. There are days where you execute thousands of trades. I mean, a lot of it it's done by computers, obviously, but it's just this myth that the media points out. Like, this Kramer story is ridiculous. I mean,
This whole
are there
thing is
specific
ridiculous.
hours that are more important in trading? Well, you get most of the volume is at the open or at the close. But I would say not really. Not really. I mean, if there's some news out, you might do something in the pre-market or in the post-market. But if you want to take advantage of the liquidity, you have to be active, like around the opening and around the close. But I don't think it's I don't think there's really like a set thing like that. But for this, I mean, I don't know, maybe because of Kramer's clients are a bunch of old men that have $20,000, I think they can make it into $1 million. Maybe they're listening to this, but I can't see, I can never foresee or imagine like where I was, like sitting at the conference table saying, oh, Trump got indicted, let's go sell our stocks. So
Well,
I don't know what the hell Kramer's talking about here.
Let's hope we got those $20,000 people watching this show so we can help them learn how to trade and make themselves financially independent.
Yeah, well, you're gonna learn a lot more from me than you are from watching the CNBC. Speaking of CNBC, oh, look at this. Kate Middleton and Meghan Markle. I really can't stand this Meghan Markle. She is such an elite. She is such a shallow, arrogant person. Now, this one here, Kate Middleton, she's rich and she happened to be in a privileged life. And what does she do with herself? She goes out and she works for charities. She gives something back to society. What does this one do, Meghan Markle? Oh, I'm going to go on the worldwide We Want Our Privacy tour, and I'm going to try to get shows on Netflix.
Steve's got a question here for you, Mark. A couple of
them. Small regional banks borrow short term and lend long term, and the arbitrage. Yeah, well, you're going to see more of them go under. I think, like Silicon Valley Bank went under, and First Republic. So one of the problems is that these banks have invested a lot of their money in commercial real estate, and commercial real estate is really weak because people aren't working in the office anymore. So my guess is that a bunch more go out of business, and maybe there's some consolidation.
Mark,
but yeah, it seems like it's pretty. They made some pretty fundamental or basic mistakes.
So I was watching this little story last night about the border and the tuberculosis that's coming across the border, and how it is jumping. It's a multi-transmissional, so it goes from human to animal back to human. So the cattle in Texas are starting to get this tuberculosis, and Texas has been a tuberculosis-free beef producer for 100 years, but now they've got tuberculosis again, so they're having to kill off all the cattle. So the lady said by October we should see beef prices up at least 30%. So how would we play that?
Well, you can buy cattle futures,
and you go. Well, I don't trade futures. Is there any other way to do it?
I don't know. I'll have to think about that one.
Because if they're killing all the cattle along with the rest of the chickens and the rest of the stuff that's been, destroyed since COVID, we're going to run into bad food problems. And beef is already high, so another 30% would be astronomical.
Let's see. Yeah, I don't know. I mean, it's a tough thing to kind of figure out because it'll benefit companies until it doesn't benefit.
Right.
Yeah. Oh, this gets me on my whole cattle mutilation kick that I'm on.
Jesus.
Wow. So this is cattle here. Look at that.
Man, I wish
Yeah.
I'd thought about this earlier.
But even this, right? Here we are in the cattle market, and we see the same principles that we see. What was resistance here becomes support over here. So this is resistance from May of 17, and it became support in May of 22. So 5 years later. So this just goes to show you this whole concept of market memory. So now I just want to look at this.
It goes back further.
Wow, look at that. So cattle prices are the highest they've ever been. I guess part of that is just regular inflation, but look at this. Look at this move. That's not a normal move.
No.
So I guess this is the market is like really starting to anticipate it. I don't know if there's a cattle ETF. It would probably be too hard to structure. But let's just see.
Did you happen to notice that Rachel Maddow had Hillary Clinton queued up for the indictment to come out last night?
Oh God, Hillary Clinton's such a bitch.
No, but here's the problem. How do you have an indictment come out from a damn judge and Hillary sitting in a studio waiting to talk about it? Come on, man. Come on, man.
And she's so snide because you can just tell that she's like, oh, I got away with
this.
She's
so nasty.
When I got my indictment, I just ripped it up and threw it out, and the FBI didn't even do anything. It's like, but they're overplaying their hand, and they're making Trump a sympathetic person, and it's hard to believe that someone of his, arrogance and big ego could be made sympathetic. But sure enough, they're doing it. So, all right, let's see what else is going on here. Let's see. Just want to run through these sectors really quick. We'll go to see our healthcare sector. I have never met Donald Trump, but I know a lot of people that have because I play golf at Winged Foot sometimes, and he's a member there. And he used to live in Greenwich, and I know a lot of people from Greenwich that know him. My friend Chris, when I was back in college, he used to work in this little convenience store on Greenwich Avenue, and Trump would pull up in the limousine every morning and go in there and buy his whatever coffee or whatever. And it's like everyone I know who knows the guy says, oh, he's a nice guy. Yeah, and the media just has him so misrepresented. And like I know of, there's a story where there was some dude who worked for him on one of his construction crews where the guy had some kind of a problem where he got hurt and he couldn't work anymore. So Trump paid off his mortgage without even telling him.
Yeah.
Just like one day the guy's at home and he gets his title in the mail for his house. It's like, what the hell? Yeah, so like he does stuff like that. You don't see Joe Biden doing stuff like that.
No, well, I mean, listen, I saw a leaked video of the guy from the Morning View, Joe. I guess I don't even know his name because I don't watch that show, but the Morning Brew talking about how just an absolute excellent person he was 2 years before he ran for office. So I mean, it's just despicable the way.
Who's that? Joe Scarborough?
Yeah, Joe Scarborough, I think. Or
I tweeted on him last night. I'll show you. I don't know if you saw my Twitter last night.
Mm-mm.
Or X, I should say.
No, I was down the SEC hole, SEO hole.
Yeah, so here is my. It's on our blog on our website here.
Yeah, that's
so. I'm Joe Scarborough. I'm an ass. See, it's class versus ass.
Ah.
And the reason why I came up with this, I was actually out there cutting my grass, and I don't know, it just kind of like dawned on me. But now. So he gets paid millions for spreading rumors. And now this is Chuck Scarborough, who I think is a really classy guy because he's actually my neighbor. And I met his wife in the woods one time hiking on the trails. And I'm a big history buff. And across the street, there's this preserve that's called the Auschwitz Preserve. And that's what we're the Stanford Land Trust. That's what we're trying to acquire. And it used to be Auschwitz's, this guy named, hey, Kyle. This guy named Frank Aschultz was like he's like one of the most important people you've never heard about. He was like this big financier back in the 30s and the 40s, and he was an advisor to various presidents. And He was a super successful investment banker, and he had this huge book collection, which of all these rare books, which he donated to Yale. So anyway, I met her in the woods. I had no idea who she was, and we just kind of started talking, and we talked for like an hour. And she's like, I'm like, what's your name? She's like, oh, I'm Ellen Scarborough. I'm like, are you Chuck Scarborough's wife? And she's like, yeah. And I was like, oh, wow. So anyway, she's like, oh, why don't you come over and check out our estate? Well, she didn't say estate, but why don't you come over and check out our house? Because they live in the mansion that Frank Ashholtz used to live in. And so, she had me over, and she was hanging out with my daughter, and he showed me around the place. And, I've known plenty of really wealthy people in my life because I'm a Wall Street, but I don't think I've ever met anyone who has this kind of money who is just so nice. And like on the estate, there's the library is like made out of metal. It looks like wood, but it's made out of metal because it was like fireproof for all his rare books. But anyway, he's a nice guy, so that's why I kind of came up with this. I'm gonna try to do 2 blog posts every day, and one is on just something that's not market related, and one is on something that is market related. And I did this here because I used to like double bubble gum. But is NVIDIA AI smart enough to recognize a bubble? And the gist of this story here, it's a Wall Street Journal story, is the price to sales ratio of NVIDIA is 43, and the price to sales ratio of the S&P 500 is 2.4. So I don't know what's going to happen with NVIDIA short term, but this is definitely like bubble territory. This is the type of stuff that we saw back in the internet bubble. So I think eventually this goes lower. Oh, look at that. This played out exactly as we talked about it yesterday. Yep. So resistance became support. We get down to support. And as I mentioned before, support is this large group of buyers. So they notice the price isn't going down anymore. And they think like, oh, gee, there must be new buyers coming into the market. So I better go out there and raise the price I'm willing to pay, because the sellers are going to go to whoever is willing to pay the highest price. So you get these buyers jump ahead of each other. And this is why when you get to support, you get a bounce. It's not because of the news or because of what Cramer's talking about. And look at where we stalled out, right at the level that was resistance and support before. So it's a perfect example of these important levels. Like this is 406.50, and this is 437. Okay, so why is it that this particular stock likes those levels? I mean, for lack of a better term, I don't really know. But what's important to know is that if you know where these price levels are, it can make your trading much easier. It's like having a map. And when something gets to one of these important price levels, it doesn't usually hang out there for that long. David Tepper Apolloza. Now, this is a guy he personally was paying 1/10 of New Jersey's income tax. So they kept jacking up his taxes. And what did he do? He moved down to Florida. I don't know where in Florida.
Good for him. Hey, MU did the same thing yesterday. When we were talking about that earlier in the morning, it spiked. It actually ripped yesterday.
All right, so let me see this. In quarterly filing. So these institutional money managers are required to publish what they're buying and what they're selling. So I just want to see this. All right, so that's a real position, 2.3 million shares. Some of these firms are structured that they're all like different little teams. So one team could be buying a stock and another team could be selling the same one if they have different strategies and different time horizons. So like this here, George Soros also reported new positions in AMD, NVIDIA. I mean, George Soros, I highly doubt he's approving and responsible for every single trade that there is in his firm. So this is like a little bit of a misnomer. A lot of times you'll see this like, SAC, like Steve Cohen did this. And the way that those firms are structured, like SAC or what they call it's 0.72 asset management or 0.72, whatever, or Millennium, you get all these different groups. And, one group might not know what the other group's doing. And if some group goes out there and buys a position, it's not necessarily that like Steve Cohen said, oh, let's go buy this position. He might not even know. He might not even know. He's just looking at the performance. So you got to be a little bit leery with stories like that. Anyway, NVIDIA there. All right, let's go look at the healthcare sector. Yeah, now look at this, right? So we get up to resistance, and now we have the opposite, right? Markets are going higher because there's not enough sellers. There's not enough supply to fill the demand. So when people want to sell, notice the share price isn't moving higher. They assume, oh, there are new sellers coming into the market. I better reduce the price that I'm willing to sell at because the buyers are going to go to whoever is willing to sell at the lowest price. So you get this snowball effect, just like you get a snowball effect coming off of support because you got anxious buyers outbidding each other. You sell off of resistance because you have anxious sellers undercutting each other. And then we can see here, right? We sell off, we get to the level that was resistance, and then we rally. So anxious sellers knock things off of resistance. Anxious buyers move things up off of support. It's not because of like whatever news they're talking about. So I think this is kind of important because healthcare is the second biggest sector. And if it looks like it's failing, which means it didn't get through. So this could start to trend lower again. And then if you have the technology sector, actually consumer discretionary sector, if this breaks down and the technology sector breaks down, that's a big part of the market in terms of a percentage. There's 11 sectors in the S&P. And sometimes at different times, different ones are in the driver's seat, so to speak. So if this support here breaks and healthcare reverses off of that resistance, and we got the financials also testing support. Oh, look at that. This is a big move, actually. Oh, so it looks like financials are breaking this, have broken the support. So yeah, so I think the market kind of looks pretty weak, man. I do. And because you just think about it, how these things are setting up. You got tech sector sitting right at support. You got consumer discretionary sector sitting right at support. You got the financials, which now have broken short-term support. And you got the healthcare sector looks like it's reversing off of resistance. So these are all negative things for the broader market, potentially. I mean, I suppose that tech and consumer discretionary could rally, but the fact that the Chinese cut their interest rates like surprisingly this morning,
Oil
and
is down quite a bit too.
and the fact that the market's down, like that's our bad action, because you would think like, oh gee, China's cutting rates, that's going to be good for the economy and good for the market, but the market's still down. So this is kind of an example of our bad action. All right, let's see what else. Let's look at some of these sectors we don't usually look at, but we should. Utilities. This is, I mean, you don't need to be a market guru, right, to see this, that there's clear support here, clear resistance. So this is something I would put on my radar screen right here. We haven't bounced yet. Might be too soon to know, but if utilities start to break this support, there's probably going to be some ideas there on the short side. And you could obviously trade this ETF, or what you could do is you could look within the sector for things that look like they're going to move more. This is, by definition, the sector is the aggregate or the average of what's in the sector. And so they're just by definition, you're going to have stuff that looks like it's going to move more or stuff that's going to move less. So what you can do is, I can't stand this guy, man. Jerk. You can go look at the stocks that are within the sector and try to come up with some trading ideas. So this is the holdings of the sector. I go up to State Street here, ssga.com, because they're who runs these. They run these things. And here's a bunch of the names. And we could just kind of go look through these. I remember we were looking at American Electric Power. That looked pretty interesting a week or so ago. Let's see what's happened there, if anything. Yeah, now look at this, man. This to me looks like this could be a potential idea on the short side here. Maybe it's a little too soon to act. But if this thing goes down maybe another 50 cents or another dollar or so, I think it's going to keep going. And And here's an interesting thing here is you got this series of lower highs. You get this descending triangle type pattern. And what's going on here is you got down at the support level, you got the buyers who are willing to just kind of hang out and just and wait. And it's like, all right, well, if the sellers come to me, I'm going to buy. But if they don't come to me, whatever, I don't mind missing it. But at the same time, you get the sellers are getting more aggressive. And you can see that by these lower highs. Markets go in peaks and valleys. And when the peaks form at a lower level than the prior peak, it tells us that the sellers are getting more aggressive. They're willing to accept lower prices. So you got a combination of complacent buyers and aggressive sellers that sets the stage for something to move lower. So especially if the whole sector starts going down, if the XLU breaks that support, there's a good chance that this makes a tradable move lower. And I think sometimes it's kind of good to look at companies like this if you're an options trader, because they're not as as in demand as like Tesla is or Apple. So on the options, you can get better premiums. You can pay lower premiums. So I think it makes a lot of sense to look at some of these other areas for trades. So that's our utility sector. I don't remember what else was kind of interesting in this Southern company. Yeah, now like I look at this and this kind of really just doesn't do anything for me. But when I look at AEP, it's like, wow, this thing looks like it's kind of set up to move here. So we're letting the market tell us what to do, as opposed to just saying, oh, today I'm going to buy this or today I'm going to buy that. It's like, oh, I'm going to go look through some of these things here and I'm going to see what looks kind of tempting. So NE is next Air Energy. Let's see what that looks like. Yeah, now look at this. So this would bode for the sector to break down. This is the biggest company in the sector. And you got the descending triangle pattern here too. But here we've broken the support. So there was a large group of investors who wanted to buy around 70.50. And now that we're below that, that tells us that those investors, they've either finished their orders or they canceled their orders. But regardless, when you take demand out of a market, it sets the stage up for the prices to move lower, because if people want to sell, they're going to have to reduce the price they're willing to sell at to attract buyers. When we get to a support level like here, a seller can sell all they want. There's enough demand to absorb it all. If a market's going down, there's not enough demand, right? There's not enough buyers. But when we get to a support level, it's like, oh, all of a sudden, it's like you could sell whatever. So say you're some big institutional trader and you come in and you got 1 million shares for sale here. Well, you can't sell them all there, right? You might have to sell the first 100,000 here, the next 100,000 down here, next 100,000 down here. That forces the downtrend. There's just not enough demand or buyers around. But when you get down to a support level, it's like, hey, you could just come into the market and sell all you want. There's enough demand. But anyway, now that we've broken the demand, I think this sets up. Well, I mean, I would replace Kramer. Sure, he gets paid a lot more than I do. So
you do so much of a better job too.
Well, he's an entertainer, and believe it or not, I've actually, I've known a couple of people that have worked for him, and they say in real life he's nothing like his TV persona. They say he's actually pretty chill and quiet. But that's his spiel, and I can't stand CNBC. It's like they should bring in some new talent, man. They've had the same people there for 20, 25 years, and it's just, I don't know. I just don't understand why people still watch it. But it's entertainment, and I think they've lost a lot of money for people because a lot of look at this. So this is why the financials are weak. Now, I say most of the time, news is not what moves the market, but a situation like this is different because if Fitch downgrades them, it's going to cost these banks. They're going to have to pay higher interest rates to borrow money, so that's going to take money right out of the bottom line. All right, retail sales increased.
Well, I bet that'll mess the Fed up a little bit. They hadn't thought about that too much. Downgrading the bank, that somebody downgrading the banks like that, and Fitch is all over us.
Yeah. Well, it's for these reasons we talked about. All right, so
Mm-hmm.
Home Depot reported. Doesn't really seem like much is going on. But one thing we can look at if you're interested in fundamental stories is you can type in the symbol and then you can type in IR for investor relations, and that'll bring us to the investor relations page. So here is, let's see right here, August 15th. So here is their numbers and companies quarterly release their earnings, and they have your income statement, your balance sheet, and your cash flow statement. So one of the things that's important to look at for retailers is if we go down to inventory, and here we see the inventory is declining. But if you look at a retailer and the inventory is increasing, that's a bad thing, because what does it mean? It means that
They're not selling products.
this is kind of odd how they have July 30th of this year, and then July 30th of last year, January. Actually, so I take that back. Let's see here. Well, actually, I'm actually no, inventory is going down, so that's good. So if you see this inventory building, that's a bad thing. The other thing you want to look at is the trends. Are they earning more money or are they earning less money? And once again, this is kind of confusing. But all right, so look at this. So they earned $4.66 a share, and last year they earned $5.06. So that's obviously trending in the wrong way.
Yeah, you got it, Cal. Thanks.
And then we want to look at our operating income and our margins. So this looks like they're probably decreasing margin. The operating income margin or income margins, that's at the end of the day a very important thing. If a company's operation margins are going higher, it shows it's becoming more profitable, or more, I mean, you should say more efficient. Like if the operating margin is 5%, well, that means every dollar of sales, after all the costs are considered and everything is settled, they make $5, 5 cents on every dollar of sales. If we see that going to 10 over the quarter, well, that's good. It shows that they're becoming more efficient. So you could just do the math here. You would divide the income by the sales, and that would give you your operating margin. So actually, let me just do that right now. I'm going to go with my calculator. And I guess all right, you can't see this, but I'll just do it. So let's see. 7210 divided by 43792. All right, so this here is a 16% operating margin. Now I'm going to do, so this is last year. They had a 16% margin. Now I'm going to do this year. So let's see. 6589 divided by 42916 equals. So now they have a 15% margin. So their margins are actually decreasing. So once people start going through these numbers, I think there could be some weakness in the stock by the end of the day here, because the earnings were less and the margins are decreasing. So people probably just haven't really looked at it and figured it out yet. So got to keep an eye on this. And what happens is traders on Wall Street get in early. They get in like 7, but the analysts don't really come in until like 8 or 9. So now you got a bunch of analysts that are starting to go through these numbers. And if they come up to the conclusion like, oh, these numbers are kind of not that good, maybe we should go out and start selling. That move typically happens like mid-morning, like maybe around 10 or 10:30, because that's how long it takes them to get their analysis done. But anyway, we could see here we got our, support levels, resistance. Let's see what else is going on here. Oh, I was looking at this Teachable last night too. So we're going to put together some courses that you all can buy, right? Because we are capitalists here. Need to make some money, right? Mama needs a new pair of shoes.
Go capitalism.
Well, it'll be worth it. So China slashes rates, halts youth jobless data. That's kind of weird. So they're not going to tell us how many people are working or enslaved, working in, working factories.
Man, don't get me
I mean, I
started on
shouldn't
the
laugh,
Uyghurs,
but
man. Yeah, those Uyghur situation is terrible.
the Survive move extends China's effort to restrict a variety of data. Wow, that's kind of interesting. Chinese officials said they would stop reporting the country's youth unemployment rate after months of spiraling increases, depriving investors, economists, and business of another key data point on the declining health of the world's second largest economy. Wow, I mean, I don't really know much about this, but that sounds pretty bad. It's like
Yeah,
another.
well, as long as we don't tell you about it, it doesn't happen. That's
Yeah,
the whole key to that.
that does not sound good. One of the things I
True.
watched is this FXI ETF. This is the China large cap ETF. Um, and as we can see, it's not really doing too much. But if you're interested in playing China, this is a way to do it. That's kind of weird though. I've the jobless rate for people. Wow, 21%. But you got to wonder how many of those people actually want to work. I mean, 16 to 24, you're pretty much at school. But regardless, it just doesn't seem like a good thing. I don't see how you can interpret that as a good thing.
Do they really get the chance to not have it? I mean, to have an opinion not to work, Mark? I don't think they have unemployment over there.
I you know I don't know. China's a strange place, and it's a place where I'll probably never go. But I used to have this intern who had spent a year in China for school, so he knew a lot about China, and he had a friend over there, and he shows me that this is way back, and I think it was '08 when we were going to have the Olympics there, and there was all this talk about the air pollution, and he shows me this email chain, and it's like, you could tell it's just this typical thing about two kids like talking back and forth, and you could read the Chinese kids emails, and you could kind of tell that he wasn't like a really good English speaker because there was a lot of grammatical errors. So then Chris writes, "How's the air quality over there?" And then the response comes back. It's like a different font. It's perfect English, and it's just like the Chinese national government is doing many things to improve the air quality. So it's like you send emails over there, and like someone's reading them. I mean, they probably have some kind of computerized thing reading them, but it's like it's censorship. And my nephew went over there for a year to teach, and he's like, "Uncle Mark, man, is like whenever it's cold out, it's like you can't even go outside because most of what they do is, but most of their energy is still powered by coal. So when it gets cold, people start firing up the coal, and it's just he's just like, it's like disgusting. You can't even go outside. So and I don't even know where he was. He was in a bunch of different cities, but it's a strange culture. It's different than us because they're communists, so they think differently. My father-in-law fought in the Korean War, and a lot of Chinese fought for the Northern Koreans, even though to this day they deny it. But you don't have the structure like you have in our military here. Like here, you have your generals and your colonels and your captains and so forth. Out over there, it's like you're either a general or a private. So all of the soldiers know like all the plans. Like I guess in the United States Army, if you got a private as a POW, they're not going to know what the overall plan is. But if you're fighting the Chinese and you get a soldier as a POW, they know all the plans. So because there's no like, there's like they're all equal. So it's a very different mindset than what we have here, and I don't think um, people really realize it.
Yeah, I
Twenty five
didn't know that.
percent of
That's
areas
interesting.
searched. Look at that, man! This is just incredible. What happened out on Maui? I saw this picture where you got all these cars on this highway, and they're all burnt out, and it's like people were just driving down the highway, and the fire just overswept them. It's like they didn't even have a chance to get out of the way. So it's pretty messed up, man. And now they're saying that it might have been caused by power lines.
Yeah, I saw
So
that. Well, California burns every year because of power lines and lack of forest management.
death toll climbs to 99 as residents brace for more. Yeah. Oh, look at this. Your boy scam Bankman fraud. Federal judge revoked FTX founder Bankman Fraud's bail, saying he had to push the limits of bail conditions repeatedly. He is going to jail. Well, that's nice. That's a kind of a nice story to hear, because this guy is a
That's a bail
scumbag who
bondsman's
deserves to be in
dream.
jail.
That's a bail bondsman's dream for the judge to revoke your bond and sentence your person to jail. That's free money. You don't have to worry about that anymore.
Yeah, well, he's toast, and it's like I've always said, when things are going well, people turn a blind eye to stuff. So you can't tell me that these people that worked for this firm, and you can't tell me that his parents, who are both attorneys, didn't realize that there's illegal stuff going on. But when everyone's making money, people kind of look the other way. Once people stop making money and things start to go down, they all kind of sell each other out. So, like you can even say that here: FTX insiders turning against scam Bankman fraud. So, I think they should treat this guy just like he walked into your house and stole money.
Yep.
Like white collar crime should be treated the same as other types of crime. All right, I'm gonna get going because I gotta go do some stuff, and I gotta get some water. And my throat is like really dry. We had another big, massive rainstorm here last night. It seems like it rains more at night than it does during the day, so there's probably a reason for that. But all right, everyone. Well, thanks a lot, and I guess we'll see you all tomorrow morning.
Have a lovely day, everybody. Do something good for somebody today.